Every year, millions of people struggle to pay their taxes. They file returns, they cross their fingers, they hope for refunds. But the top 1%, they play a different game. They don't just reduce taxes, they avoid them, and they do it legally. No secret vaults, no offshore accounts, just loopholes, incentives, and the law working in their favor. In this documentary, we're pulling back the curtain to show you exactly how the wealthy avoid taxes without breaking a single rule. This isn't financial advice, it's financial awareness. Welcome to the system you were never meant to understand. This is how the 1% avoid taxes legally. Let's get something straight. This isn't tax evasion. That's illegal. That's prison time. This is tax avoidance. And yes, it's 100% legal. Evasion means hiding income. Avoidance means restructuring it. The wealthy don't break the law. They hire it. They use lawyers, accountants, tax strategists who know the code inside and out. And the kicker? The same people writing those laws are often the ones benefiting from them. So the next time someone says, the system is broken, tell them, no, it's not broken. It was built this way. So if the rules are built to reward structure, not effort, then how do the ultra-wealthy structure their income? Here's one of the simplest and most powerful strategies. Borrow. Don't sell. Let's say you're sitting on $100 million in stock. Maybe it's Apple, maybe it's your own company. Now, if you sell that stock, you'll pay capital gains taxes, possibly 20% or more. That's millions of dollars, gone instantly. But what if you don't sell? What if you borrow against it? This is what the rich do. They go to private banks and say, here's my portfolio, give me a loan. And the bank, they do it, happily, because the collateral is high value, the risk is low, and the client is wealthy. Now here's the genius part. Loans aren't considered income. You can borrow $5 million against your $100 million portfolio and pay no income tax. With that borrowed money, you can buy a house, fund a startup, live your dream life. Meanwhile, your stock continues to grow, your assets stay untouched, and your taxes, zero. This technique is often summarized as buy, borrow, die. You buy appreciating assets, stocks, real estate, businesses. You borrow against them, tax-free. You pass them on when you die. And thanks to the stepped-up basis rule, your heirs inherit the asset at its current value, not what you originally paid. The unrealized gains, they vanish. No tax, no penalty, just generational wealth. This is how billionaires can report shockingly low taxable income while living like emperors. It's not tax fraud. It's not hiding money offshore. It's a loan. It's collateral. It's leverage. And it's one of the most elegant legal tax shields ever devised. So, we've talked about borrowing against your wealth to live tax-free. But where do the rich actually build these financial fortresses? Let's take a detour to a tiny state, one that holds an outsized influence in the world of corporate tax. Delaware. Population, under 1 million. Business entities registered, over 1.5 million. It's not a coincidence. It's a strategic choice. More than 66% of Fortune 500 companies are incorporated in Delaware. Not California, not New York, Delaware. So why does nearly every major US company and countless international ones choose Delaware as their legal home? Let's break it down. Delaware offers no corporate income tax on revenue earned outside the state, no sales tax, anonymous ownership filings, a dedicated court of chancery built specifically for corporate law. That last point? It's big. The Court of Chancery doesn't use juries. It uses judges who specialize in business law. That means faster decisions, less uncertainty, and legal rulings made by experts, not 12 random citizens. This gives corporations something they crave, predictability. But there's more. You can incorporate a business in Delaware without living there, without operating there, and often without revealing who you are. And if you're doing business in other states, you still get the Delaware protections, while only paying taxes in the states where the income is earned. Now, if you're a small business, this might seem like a technicality, but for large corporations and holding companies, it's a goldmine of flexibility, protection, and, yes, tax efficiency. Companies like Apple and Coca-Cola aren't just using Delaware for tradition. They're using it to maximize control, minimize exposure, and streamline their legal structures. And here's what most people don't realize. You can do this too. You can form a Delaware LLC in under 20 minutes, right from your phone. It costs less than $200 a year to maintain. You don't need a skyscraper. You don't need a legal team. You just need to know the process. This isn't a loophole. It's not a hack. It's not even hidden. It's a feature. And the rich, they've been using it for decades. So, we've covered stocks and loans. But what if you prefer something tangible, something you can touch, walk through, rent out? That's where real estate comes in. And it's one of the most powerful and misunderstood wealth tools available. We all know real estate appreciates. You buy low, sell high, build equity, collect rent. That's the basic play. But the wealthy, they unlock a different layer. They don't just profit from value going up. They profit from the government pretending it's going down. Let's explain. The IRS lets property owners write off a portion of their building's value every year, as if the structure is wearing down over time. This is called depreciation. So let's say you buy a $5 million rental building. The IRS says you can deduct a portion of that, maybe $180,000, every single year for up to 27.5 years. Even if the property is actually going up in market value, even if your tenants are paying you handsomely, even if you're earning passive income month after month. On paper, you're losing value, which means tax deductions, combined depreciation with mortgage interest deductions, repair and maintenance write-offs, property tax deductions. Now your cash-flowing property looks like a money pit to the IRS. That's right, you can make money and show losses, legally. And that means paying little, or even no taxes at all. And when you sell, you can use another strategy, the 1031 exchange, to roll those gains into a new property, deferring the tax again. It's like monopoly, with the IRS picking up your losses. The rich don't just invest in property to own land. They invest to control taxes. And depreciation, that's the quiet weapon they use. So we've looked at property, paper, and policy. But now, let's talk about perception. Because if you really want to win the game, you don't just protect your wealth, you polish it. And nothing polishes better than philanthropy. To the public, billionaires donating fortunes looks like pure generosity. To the IRS, it's also a tax deduction. Here's how it works. A billionaire creates a private foundation, like a 501c3. They donate appreciated stock or assets to that foundation. Because it's a charitable contribution, they receive a massive write-off. Because they donated stock, they avoid capital gains tax. And because it's their foundation, they maintain control. They decide where the money goes, what programs get funded, even who gets hired. It's not fraud, it's not hiding money, it's not offshoring, it's charity, engineered with precision. Let's use an example. Imagine a billionaire owns $50 million in stock. Instead of selling and paying tax, they donate it to their foundation. Now they avoid capital gains, get a full deduction for the donation, still influence where that money ends up, and foundations don't have to give away everything at once. They're only required to distribute 5% of their assets each year. That means 95% of that wealth can sit, invested, growing, inside the foundation. And the kicker? The billionaire can hire staff, pay family members' salaries, even fund media and research initiatives, all from inside that structure. To the world, it's charity. To the wealthy, it's a tax-advantaged legacy machine. So next time you see a billionaire give it all away, look a little closer. They might be giving it away to themselves. So, the wealthy borrow, shield, write off, and even give strategically. The system seems to bend in their favor. And you might be thinking, why hasn't anyone fixed this? Here's the truth. The system isn't broken. It's functioning exactly as intended. The tax code is over 70,000 pages long, filled with exceptions, conditions, carve-outs. And who writes it? Lawmakers. But those lawmakers, they're advised by lobbyists, funded by donors, influenced by the very people who benefit from the loopholes we've talked about. Many of them, politicians, CEOs, investment bankers, use these same tax strategies themselves. Think about it. If you had the power to create tax policy, and you could benefit from it personally. Would you make it simple for everyone? Or would you make it just complex enough that only insiders could navigate it? The truth is, confusion protects wealth. The average person doesn't have time to study tax law, but the wealthy, they pay people to do it. And when change gets proposed, it's watered down. It gets lobbied out, because those with influence don't just play the game, they help design it. So no, the loopholes probably won't close, the incentives likely won't change. And the tax code, it'll stay long, confusing, and full of opportunity. For those who understand it, this isn't a glitch in the system. This is the system. So if this really is the system, what can you do about it? Here's the truth. You don't need to be rich to think like the rich. You don't need millions to start learning the rules. Because the difference isn't money, it's mindset. Wealthy people don't just work hard. They study, they structure, they plan. They don't play fair, they play smart. And now, you know what they know. The tools are out there. LLCs, real estate tax shields, asset-backed loans, charitable foundations. You may not be able to use all of them today, but one day, you might. And when you do, you won't be guessing. You'll be ready. This is the kind of knowledge they never teach in school, because it's not designed for the masses. It's designed for those who seek it. And that's you. This is Inner Loop. If this shifted your perspective, share it, subscribe, and keep learning. Because knowledge isn't just power. Knowledge is leverage.